What's going on, family? Welcome back to the channel. Today we're talking about, is it the best time in 2022 to buy a house? And we're going to just dig into a lot of the economic indicators that's going on, or a lot of the changes that we see in real time that's happening fairly fast, I would say. But just kind of figuring out, is it a good time to buy a house right now? Whether you're on the residential side, as a consumer for a primary residence, or if you're an investor looking to buy rental properties or even fix and flip properties like I do, then what should you be doing right now? So let's get right into it. I'm Johnny Lynum. Welcome to the channel. Make sure you hit the thumbs up button and the bell so you can be notified whenever I drop new content. But yeah, I'm a real estate investor, fix and flipper. We buy apartments as well too. We love the bird strategy, and we've been investing for a while now. And I wasn't as active when '08 hit and going through that downturn. I just had my primary residence at that time during the recession. So I make it my point to listen to other seasoned investors to understand what it is that they're doing right now in the market, and kind of what is their sentiment. So you look for people with gray hair that's been around from the 70s, the last time we had enormous inflation, where we had rates in the upper teens, to kind of get a feel. And a lot of people are asking, will the market crash? Are we facing a real estate crash? Will prices be cut in half over the next couple years? Or how fast will this happen? Will it happen in 1 year? Will it happen in 5 years? And I'm trying to understand the dynamic of the market, because people, they want to time it. If I know prices are going to be 25% cheaper in 6 months, then why should I buy right now? And I think that's the thing that we have to realize when we start talking about the recession, the impacts of the recession, how it's going to actually unfold, that you're kind of trying to hit a moving target. And I think that's where it comes down to the fundamentals that you're looking at, with where you want to be, with what type of investor that you're choosing to be. And I think that's why you have to become crystal clear on what it is that you're doing, what niche are you focusing on, where is that you have a straightforward strategy, and that way you can kind of hedge your risk. Because as an investor, whether you're buying stocks, bonds, mutual funds, real estate, oil, whatever it is that you're buying, your job is to learn how to manage risk. And in this case, is real estate. And like for me right now, we subtracted off $25 a square foot in our market, is where we're underwriting to, as we see things are staying on the market a little bit longer, a little bit more inventory coming online. And then we're also looking at following where rents are in our market too. Does it make sense to refinance out, pull all our capital out, and just keep it as a rental? That's an option. So that's one of the biggest things to do, is just making sure that you have a strategy and understand what's going on. Because right now we know the Fed has already said, it came out today as of this video, that they're probably going to raise rates again another 75 basis points. So that's going to be 2 months in a row of 75 basis points, and they're trying to help enforce and make the economy slow down. And I think that's one of the things that we're seeing, that the housing market is slowing down. People aren't buying as much, inventory is trickling up. But I think you see the same thing maybe on the automotive side too, that car loans are starting to, they're not requesting. People aren't trying to buy houses, with refinances have went down, because people already have low rates locked in, and they're not trying to move and refinance their properties, which have slowed banks down tremendously with the level of volume that they normally have been doing. Because housing over the last couple of years has broke a lot of records for the increase in the average price for a single family residence. And it's getting to the point where it's outpacing income per household, whereas that it's just becoming untenable for a lot of people to be able to afford a house just based off the salary and the income that they have coming in on a monthly basis. And so I definitely believe there's going to be some sort of correction. To what extent, not sure. But if you look at it, for the most part, a lot of areas have seen 30, some over 40% appreciation in the last 2 years. And if we go back to pre-pandemic levels, is that really a crash? If the market corrects 20-25%, is that really a crash? And I think that's where we got to understand the dynamic of where we were a couple years ago, being able to peel the onion back and be conservative when you're buying. You shouldn't be baking in any appreciation. You should be looking forward with some type of contraction in your price per square foot, in your resale price if you're flipping, or if the repair values, if you're going to refinance it and keep it, just understand that things are changing and you need to be a little bit more conservative than you had to be in the past. And so that's what I think the biggest thing is. But I'm still buying. I'm actually looking at multifamily as well too. But you have to be conservative in your underwriting and prepare for the future. Make sure that you're getting great deals. And there's a lot more great deals coming. I truly believe, because there's a lot of real estate investors who don't have the knowledge, don't understand fully what they're doing, and they're getting gun shy, which they probably should. You know, you don't want to lose your shirt. But there's going to be a lot more opportunities, whereas I think now you're already seeing that some sellers are panicking because they had the fear of missing out, that they can't get their house sold, that the narrative that the media is pushing. And so a lot of people are getting scared, which as an investor, use that to your advantage to let people know, hey, you don't have to overpay for a property, and you don't have to, you can lowball and let them know, hey, this is what I can offer. It's not like you're competing with a whole lot of other people. And so you should be able to get some good deals from people that are looking just to cash out, that just want to be done with real estate. And therein lies the opportunity if you go out and seek it. And so at the end of the day, the best time to buy real estate was 20 years ago, and the next best time is today, because I'll guarantee you the price of real estate is going to be higher 10 years from now. It may go back and push back 20, 25, 30%, and then come back up. But it's coming back up eventually. And I think this is the biggest thing with real estate is, you know, if you're buying for cash flow, even with higher interest rates, if you can make sure that your property cash flows and you're conservative on what you're going to get on your rent, with your rent projections, you're going to be fine. You can ride out any storm. You're going to have appreciation if you're in the right area. You're going to have debt pay down. Your interest rates are lower than inflation right now, so you're beating inflation. And then at the same time, you know, you got the tax write-offs and benefits that come with that. And so I think those are just the same reasons why just hold to the fundamentals, be conservative, and there's still deals out here to be had. You know, and so that's one of the things. And if you want to get more information about why I invest in real estate, check out one of my videos. You'll have the link below, where I just kind of go into all the reasons why I invest in real estate. And I just rolled off the 4 primary that you think about. And then also, you know, if you're interested in kind of, you know, just figuring out, hey, what are some different strategies? Check out my book. You can get a free download of my book, Millionaire Real Estate Success Strategies, What They Forgot to Teach You in School, at socialproofwealth.com/free. And so I think 2022 is going to be a great year for those that are prepared. Right now, I think another 6 months, we're going to be a whole lot smarter about how the Fed's going to work. Because there's some talk already about them after this ramp up in rates. If they start seeing a slowdown, we hit a recession, and we start having job layoffs, they're going to tailor back on how aggressive they be with creating the interest rates. And I think that's going. So who knows what the Fed's going to do and what the government's going to do with how they position themselves through this downturn. Because at the end of the day, we got a strong dollar. The dollar is surging right now because a lot of the other economies, especially in Europe, they're being impacted by the Russia-Ukraine conflict. And then also you got the China with their zero COVID policy that, you know, they're having a lot of fluctuations with their workforce and being able to get into the plants and produce goods that they can sell abroad. So a lot happening in the environment, but focus on the fundamentals, get the knowledge, align with seasoned investors, whereas that you can be in a community, a mastermind. And, you know, if you're looking for a community, then definitely check out mine and as a consideration. And, you know, we got some great things going on with the students in my community with on the residential side, but on the commercial side as well, too, with doing deals and just a whole lot of opportunities across the Southeast. So with that, I'll see you guys on the next video.